Imagine two people. Person A owns a $2 million home, exorbitant upkeep, zero monthly cash. Person B receives $500 a month after tax from index funds or rentals. Most chase Person A. But if you're chasing freedom, Person B wins, hands down. That illustrates the divide between net worth and cash flow. Net worth measures your total assets minus liabilities. Stocks, real estate, savings. It's what shows up on paper. But cash flow? That's the money moving through your life today. Income minus expenses. Net worth might include that big house and 401k, which you can't access without penalties. Nearly 80% of people's net worth is tied up in illiquid assets like that. Liquid net worth is what you can actually access without selling your house or withdrawing from a 401k. For example, Person A's net worth is $800,000 via home and retirement, but no cash on hand. Person B's net worth is also $800,000, but in liquid assets, index funds, rental income, cash. Person B can move instantly. Same net worth, totally different options. Many young professionals start with negative net worth, thanks to student loans. That's normal. It's the debt-heavy front load of your financial life, not a failure. Net worth is useful over time. It tells you if you're improving year over year, diversifying, or over-leveraged. But it doesn't tell you how liquid or flexible you are. That's where cash flow comes in. It's income from salaries, dividends, rentals, side hustles, minus living expenses. According to Bank of America, 20% of households, even those earning over $150,000, live paycheck to paycheck. That means they earn a lot, look wealthy on paper, but have zero buffer. They're a month away from crisis. Cash flow gives you options: remote work, location flexibility, starting a side business, or walking away from a toxic job. But only if your cash flow covers your lifestyle. You become truly free when your passive or semi-passive income exceeds your monthly burn rate. You don't need millions of net worth. You just need predictable cash flow. Here's a 5-step ladder to build it. Earn active income from a job or freelance work. This is where most halt. Increase margins, either raise income or lower expenses. Avoid lifestyle inflation. Reinvest margins into income-generating assets. Dividends, rentals, digital products. Systemize income, automate investments, outsource operations, hire managers. Stop trading time for money. Operate long enough until passive income covers expenses. Then work becomes optional. This isn't theory. Most early retirees didn't save millions. They just achieved enough reliable income to cover their burn rate. Traditional retirement models assume net worth will replace your job income at age 65. But median retirement account balances for Americans aged 55 to 64 is only $185,000. Most retirees spend $52,000 per year. That math doesn't work. But if your cash flow generates even $3,500 a month, and your expenses are $4,000, your savings burnout slows dramatically. Cash flow trumps net worth every time when it comes to freedom. Net worth shows how wealthy you look. Cash flow shows how free you really are. If you're building net worth but bleeding cash each month, you might look rich, but you're not free. Focus on creating income that's reliable and scalable. The rest is just decoration on paper. This has been your shot of biz, finance, and motivation.